Hello there, I'm Dogozu Kumalo. Welcome to the SME.TAX Podcast. Over the next 5 minutes or so, we'll help you, the entrepreneur looking to grow their business, unpack complex personal finance, business, and financial terms. We aim to be the unseen hand supporting entrepreneurs by offering a single point of entry, transferring knowledge that you can apply to scale your business. Last week, we unpacked the world of investing and how to get yourself started. Today, we'll take a look at the one thing aside from death that is certain in life: taxes. Our taxes allow the government to perform its civil duties like building new roads, hospitals, and schools, as well as supporting socio-economic development in the country. Ensuring that your personal and business returns are up to date is your responsibility as an individual. Not only does it protect you from future scrutiny, but gives you ease of mind that you have done your bit to develop our country. Filing your tax returns also does not mean you are always the one forking out money to the taxman, but you can also receive a refund for some taxable expenses. Sometimes you're not required to file your tax returns, but it's still a good idea to check in every year to ensure that you're tax compliant. So how do you get yourself right with the taxman? The South African Revenue Services, or SARS, is responsible for the collection of taxes, with tax categories including individual, companies, trusts, employers through pay-as-you-earn, VAT vendors, importers, and exporters. Direct taxes are those imposed on the taxpayers mentioned, while indirect taxes are collected by an intermediary from the person who bears the ultimate economic burden of tax. If you are a tax resident of South Africa, you have to pay tax on income earned in the country as well as from all over the world, and this must be declared in a tax return submitted every year to SARS. However, if you're not a tax resident of South Africa, you only have to fill out a tax return if you earn money from sources in the country. You don't have to pay tax on income earned outside the country. Entrepreneurs and small business owners need to be aware of the tax obligations of running a business, whether in the form of a legal entity or in a personal capacity. SARS has created one of the best systems in the world for submitting your personal and business tax returns online, and also have a support system to walk you through every step of the way. We also here at SME.TAX to help guide you through the process. Keeping on top of your taxes and ensuring you are compliant is essential to seeing through your business growth. With that said, let's bust some jargon with SME.TAX. First is the South African Revenue Service, or SARS, which is the body responsible for collecting taxes from tax residents in the country on behalf of the national government to enable it to perform its civil duties like building roads, hospitals, and schools. Tax filing is the process of submitting your annual tax returns. A tax return is documentation filed with the tax authority, or SARS, that reports your income, expenses, and other relevant financial information. This determines how much tax you should pay over or how much it owes you in a refund. Provisional tax is a method of paying the income tax liability in advance to ensure that the taxpayer does not remain with a large tax debt on assessment. Provisional tax allows the tax liability to be spread over the relevant year of assessment. It requires the taxpayers to pay at least two amounts in advance during the year of assessment, which are based on estimated taxable income. A third payment is optional after the end of the tax year, but before the issuing of the assessment by SARS. On assessment, the provisional payments will be offset against the liability for normal tax for the applicable year of assessment. A provisional taxpayer is any person who receives income or to whom income accrues other than a salary. Most salary earners are therefore non-provisional taxpayers if they have no other source of income. It is important to note that receiving exempt income does not make you a provisional taxpayer. That's if you receive interest of less than 23,800 and under 65 years, or if you receive interest of less than 34,500 Rand and you are 65 years and older, or if you have income in a tax-free saving account. VAT, or value-added tax, known in some countries as a goods and services tax, is a type of tax that is assessed incrementally. It is levied on the price of a product or service at each stage of production, distribution, or sale to the end consumer. Employee tax refers to the tax required to be deducted by an employer from an employee's remuneration paid or payable. Pay-as-you-earn is a method of paying income tax and national insurance contributions. Your employer deducts tax and national insurance contributions from your wages or salary or occupational pension before paying you your wages or pension. The Unemployment Insurance Fund, or UIF, gives short-term relief to workers when they become unemployed or unable to work because of maternity, adoption leave, or illness. It also provides relief to the dependents of a deceased contributor. And lastly, a skills development levy is a levy imposed to encourage learning and develop in South Africa and is determined by an employer's salary bill. Now, this may seem like a lot to understand, but we're always here to give you a little bit of clarity. So do follow and engage with us on all our social media platforms at SME.TAX to bust more jargon for your business success. You want to join us next week because we'll be looking at ways of eliminating debts in your personal and business life. You don't want to miss it. I'm Dogozo Khumalo. It's goodbye for now.